Hi there, welcome to Market Call. David Burrows is on the show today, Chief Investment Strategist at Barometer Capital Management, and he'll take your calls, emails, tweets and video questions on North American large caps. Let's have a look at that number, 1-855-326-6266. Send an email to marketcall@bnn.ca or put your question on Twitter. Remember to include that all at Market Call. David, great to see you.
Great to be here, Andy.
One of the messages you have for investors today is we're looking at a backdrop of increasing profits and companies buying back shares.
Yeah, we continue to be really positive on this market. I think that the pullback in end of January, beginning of February, while it felt like a bit of a short, sharp punch in the face, it's what happens when things get a little bit overcooked. It's really healthy. It resets the wall of worry. And reminds people there are some risks out there you got to keep your eyes on. But the net of it is the earnings, not only did 78% of companies beat estimates in the last quarter, and 80% of companies beat revenues, but in January we had the biggest month of upward earnings revisions by estimates since 2002.
2002.
So if people think the PE is too high for the market, the price-earnings ratio, if the earnings estimate has been too low, the PE isn't as high as they think. So if 80% of companies are beating estimates and the estimates are accelerating upwards, it means that the PE is actually much lower and values are still very reasonable.
Are you talking mostly the U.S. market here?
Specifically U.S., Europe as well, less so Canada. Okay,
let's have a quick look at a 10-year for the S&P 500 because the market did catch a cold, but you don't reckon it's pneumonia.
There is no bull market in history that came to an end on the first shot. You'll have probably higher volatility this year and probably nothing really significant until later in the year. But that was sort of a first little warning shot that there are always risks out there and you can't get too far out over your skis.
What you reckon tech is still a place to be? That's showing sector leadership.
Yeah. So in a structural or a long-term bull market, it will tend to be that certain industries and themes wind up with a tailwind for an extended period of time, and others wind up getting hurt for an extended period of time. So if you remember in the 1990s, Canadian stock market made 7% a year, the S&P made 18% a year. They had tech and they had healthcare, they had a bigger consumer. And so as it stands now, since early 16, tech, financials, industrials, and some areas of consumer discretionary have been leading the market. And I think it's very, very helpful to know that while those sectors were hitting new relative highs versus the market going into the correction, since the correction, they have made higher relative highs versus the market. In other words, what was leading going into the correction is leading coming out. This is not done.
Oh, so there hasn't been the rotation.
There's been no rotation.
Yeah.
And in fact, the stuff that was weak going in, the sort of bond proxies, things that act like the bond market, have continued to behave weakly. And so I think that there's a very clear themes we can all take advantage of in this market.
And you're going to have one tech pick among your top picks, and it's an unusual company. I haven't come across it before. Yeah. So I say unusual, less known. David Burrows is our guest today on Market Call. He's President and Chief Investment Strategist at Barometer Capital Management. He's answering your questions on North American large caps, 1-855-326-6266.